Hi everyone, welcome back to the channel and yet another informative video. In this video, I'm going to be walking you through everything you need to know about recession and how we can prepare for it. It is not surprising that 2022 has been a year of volatility and change, as the world has learned how to manage the ongoing effects of the pandemic and the necessary adjustments it brought about to workplaces and the labor market, deal with supply chain disruptions and inflation, experience the implosion of FTX and crypto in general, and manage geopolitical unrest between Russia's invasion of Ukraine. In addition to new opportunities and challenges, some of these trends are probably going to persist in 2023. Let's take a look at some of the popular headlines that have been grabbing a lot of attention lately. Let's see what Jamie Dimon, the chairman and CEO of JP Morgan Chase, has to say.
Other news, which is not good, is that rates are now, 4% on their way to 5%. Inflation is eroding everything I just said, and that $1.5 trillion will run out sometime mid-year next year. And so when you're looking out forward, those things may very well derail the economy and cause this mild or hard recession that people are worried about.
The textbook definition of a recession is a significant decline in economic growth that lasts months or even years. During a recession, a country's overall economic output declines, unemployment rates go up, retail sales fall, businesses cut their spending, and hence manufacturers produce less goods. A recession is a significant, widespread, and prolonged downturn in economic activity. GDP is the abbreviation for gross domestic product. It is an important tool which is used to assess how well or how poorly an economy is doing. It counts the total monetary or market value of finished goods produced in a country over a specific period, such as a quarter or even a year. A common rule of thumb is that a recession occurs when there are two back-to-back or rather consecutive negative GDP quarters. Again, let's stress on consecutive for a second. The GDP in the first and second quarter of 2022 was negative, but in the third quarter, it increased at an annual rate of 2.9%.
Should the American people prepare for a recession?
No. Look, they've been saying this now. Every 6 months they say this. Every 6 months they look down the next 6 months and see what's going to happen. It hadn't happened yet. It hadn't. There's no guarantee that they're going to be. I don't think there will be a recession.
So the question remains: are we in a recession or not? Let's find out. The economic growth that was expected after the pandemic has most likely faded away. The entire global economy has experienced slow growth and high inflation for quite some time now. Predictions say the worst is yet to come. To get a clear picture, we need to look at what's actually happening. High inflation, for example, is eroding the purchasing power, which in turn indicates that the Fed would have to raise borrowing costs, and that's leading to disturbed markets. Then, as you all know, there's also problems overseas with the war in Eastern Europe and COVID-related shutdowns in the world's second largest economy. So, just 2 years after the pandemic, the global economy is once again faced with difficult challenges due to slowed growth and high inflation. Fears of a recession are growing. Also, supply chain constraints and high oil prices due to the Russia-Ukraine crisis have made things stiffer. But all of this is on paper. Question is, how do all of these things translate into economic downturn? And for this, we have to think about corporate earnings, right? So, shipping costs rise, raw materials get more expensive, that cuts into margins, and finally leads to lower corporate earnings. It also indicates that companies invest less because higher borrowing costs makes return on projects less attractive, and in turn, business investment decreases. And then we all know this. Consumers, as a result, tend to buy fewer things as their basket of goods like milk, bread, and eggs, which tend to get very expensive. So, these are the actual mechanisms by which an economy can fall into a recession. Finally, let's talk about the housing market, how it's affected, and its future. The housing market can be thought of like two very different movies. The first half of 2022, with the mortgage rates being well in the 3s and 4s, was like fast and furious. Houses were selling like merchandise on Black Friday, with multiple offers, waived contingencies, and buyers paying $100,000 over asking price. But what happened to all of this in the second half of 2022? The big chill or frozen. The number of listings dried up, contracts were cancelled, the buyers still out there demanded concessions, mortgage rates spiked up to 7%, and homebuilder sentiment hit rock bottom. By September, a full-fledged housing market recession had set in, and the market looks likely to remain frozen well into 2023. Economists indicate the best way to prepare for a recession is not to retrench, but instead to build resilience and protect your finances from an economic shock. You can do that by ensuring that you have a steady source of income. Lock in a new job or ask for that raise now. With unemployment at its lowest in nearly half a century and plenty of openings, it's a job seeker's market. A recession could quickly change all that. Build up your cash cushion. Try to have at least 6 months of living expenses covered in case you lose your job or have unexpected emergencies or anticipated expenses like college tuition. Now, this may mean changing your buying and spending habits by spending more on the things you need versus the things you want. If you're invested in the stock market, now may be a good time to rebalance your portfolio. If you need your money within the next 1 to 3 years, you might want to consider moving some of your investments into cash or the relative safety of the bond market, money market funds, or dividend-paying stocks. If your time horizon is 3 years or more and you have a diversified portfolio, experts agree that the best thing that you can do is write it out. They say the most effective way to meet your long-term financial goals is to stay invested, stay disciplined, and don't let your emotions get the best of you. Stay employed, keep making money, don't speculate on stupid investments, buy a wide range of assets, and always, no matter what, subscribe if you haven't done that already. So with that said, guys, thank you so much for watching. I'll see you in the next one.